WTI crude oil futures continued to move higher on Friday, with last February's high at $54 well within reach. WTI oil is currently trying to get to the test of the $52 level as traders remain encouraged by Saudi Arabia's decision to cut its oil production by 1 million barrels per day in February and March. Investors continue to look beyond rising coronavirus cases, instead choosing to focus on the prospect of lower supply after Saudi Arabia pledged to cut output. It looks like oil is also supported by the global rush to buy riskier assets. The risk-on mode is highlighted by the sell-off in the precious metals segment, which is also hurt by rising U.S. government bond yields. If traders increase their purchases of oil in a bet on a robust rebound of the world economy, oil may soon get to the test of the $55 level. The pandemic claimed its highest U.S. death toll yet, killing more than 4,000 people in a single day. China reported the biggest rise in daily cases in more than 5 months. Japan may extend a state of emergency beyond the Greater Tokyo region, according to Reuters. Meanwhile, it may be harder to ignore the developments in Europe as the situation with the virus is heading in the wrong direction. London Mayor Sadiq Khan was forced to decline a major incident in the city due to the unprecedented pressure on the healthcare system. In France, Strasbourg announced a curfew from 6 p.m., and French Prime Minister Jean Castex stated that more regions could be added to the 6 p.m. curfew list. At this point, it looks like European countries will have to keep significant virus containment measures in some form for the most part of the first quarter, which may have a significant impact on oil demand. It is not clear when traders will pay attention to the latest developments in Europe, but the risk for the oil demand is material. The move by Saudi Arabia could keep oil prices propped up until February. But at some point prices will become overextended as the focus shifts towards slower demand for gasoline and other fuels in the United States and other parts of the world due to wider restrictions to contain the spreading COVID-19 pandemic. If traders' focus shifts from the longer-term view to near-term problems, oil may suffer a sell-off as demand in Europe is set to remain weak in the first quarter of this year. In fact, it looks like the outlook for the European oil demand gets worse day by day due to problems on the coronavirus front. The demand numbers are bearish, which tells me that speculators are bolstering crude oil prices. They have placed a big bet on the vaccines stemming the surge in the virus and putting the global economy back on a path toward a speeding recovery. Nonetheless, oil prices are ripe for a correction in coming months if speculator-driven rallies are not backed by stronger fuel demand soon. This is not going to crash prices but return them to more reasonable levels. OPEC Plus can always cut production further to offset lower demand. Because of this, investors will be looking to buy on any weakness because they believe that OPEC Plus is their safety net and has their backs.